to another episode of The Finish Line. I'm your host, Kajan Kunabalasingam from Fit Mortgage. We got a special guest here today, Stephen Lang from VWR Capital. Welcome, Stephen. It's a pleasure to meet you today again. I know you had a huge journey from BC.
Did, yes. Just flew in last night, so.
All right. He just flew in just for us. No. So, Stephen, we've been doing business with VWR for a very long time.
Yes.
And how long are you guys been with, how long has VWR been around now? Tell me a little bit more.
Yeah, so first, thanks for partnering with us. It's great. So you're very easy to deal with and
I try to.
value our partnerships. So we have been around since 1993, so for over 30 years. So it's actually one of the things that sets us apart a bit, and it is our experience. So we even have other MICs that are invested in us as well, too.
Oh, really?
Yes, so we are located out in BC and have been letting in BC through to Ontario for over 30 years.
Nice. And you are the sales manager and you run the whole team in VWR?
Yeah, so I am. I change my title often just to fake people out. So I am the director of sales and marketing at this point, and we are actually a team of only about 25 people, even though we manage about $800 million. So we are a small team, and we do a little bit of everything. So
that's awesome. So what makes you different from other? There's so many privates and so many MICs, right? What makes you different?
So I think what separates us a little bit, we are in the residential space. Just so everybody is aware, we are an equity lender, and our
just
fees, residential, yes. Okay. And our fees, I would say, have always been consistent and the lowest in the industry. And now we can add to it, we are 24-hour turnaround for any commitment as well too.
I can vouch for that. You guys spit out commitments within 24 hours, which is amazing. You guys did a lot of back end work on that, which is amazing. You guys are probably one of the few that still does a flat fee. Is that correct?
Correct, yeah. So we have very simple model. So we have a 1-year term, and that is an open term or a closed term at the exact same rate. However, if you do a closed term, we do have a fixed set fee starting at $750 for mortgages under $500,000 and $2,000 for those mortgages between $500,000 and $1 million. So.
That's awesome.
On the open side of things, it's 1% lender fee.
So you just pay 1%. That means you can break it any time with no penalty.
That is absolutely correct.
But the one with the fee, you can break it, but you have to pay a penalty? Is that
correct? And so we only have one penalty calculation, and that is 3 months interest penalty.
Okay, awesome. Good to know. Now, in terms of how's the market now? I think the market that we started off and now where it's trending, are you guys scaling back or what's your vision on that?
Yeah, so I'll put it this way. We are a conservative lender. We've been around for a long time, and we've been around for a long time for a reason as well, too. So the ultimate goal is investor return, sure, but it is a fine balancing act because without brokers and partners such as yourself, we wouldn't be in business. We wouldn't have an investor return. So in a market like this, very tricky, right? So there's still some uncertainty. Uncertainty is the word of the day for sure for the last 2 years. There probably will be for a couple more years as well too.
You guys foresee that?
So things such as condos, and we know the condo market quite well, and I'm sure it's been discussed in detail in many different channels. We have scaled back, and we still do them, but at 65% loan.
65%?
Yes.
Or unless they tag another property, then you guys will...
Yeah. So you could sell the product yourself for us at this point that you know it so well. So yes, inter alia blanket mortgages, we do them all the time. And if you do tag another property, we can potentially get higher for you too.
Okay. Now, does a certain, you guys still do condos, right?
Yes.
I'm going to jump back into the condo now. Does it matter, is it just condo across the board, or is it condos in BCs are look different than condos in Ontario, condos in Calgary? They're different. Is that what you guys doing, or across the board?
Well, it is across the board now, and it has been in cycles. So Ontario definitely was, I believe, first, right? And so that's just a volume play, right? So it's just population, number of units for sure. BC, actually, we saw lag quite a bit. The difference between a BC market and Ontario market, I would say, is probably the future. So the future looks to be in BC, there hasn't been any new permits or new starts and new builds. So you can see there's going to be a time where there's a need again. We're not one to time the market, but we will be back into the market. And we know it's a secure it's secure real estate that we still want to be a part of.
Yeah.
Ontario, taking a bit longer for sure. The sheer volume of vacant units, the return to work piece, even though it's been talked about for so many years, just isn't
Still harder
happening.
to implement.
It just isn't happening, right?
Yeah.
So, yeah.
You guys have a great feature where renewals. You want to elaborate on the renewal for me, please?
Yes, so I'm glad you brought that up. So if we put all of our fees into everything, our renewal is probably one of the things we're most proud of as well too. So $200 flat fee for a renewal. If everything is done satisfactory, if your insurance or property tax is up to date, if all the payments have made on time, it's $200 for another year term.
That is probably the lowest in the industry.
It is, yes.
I haven't never seen anybody beat that. Like, you know what I mean? So $200, that's amazing.
Yeah.
And that's one of the reasons that we keep coming back, because sometimes it's not about the fees. It's about, like, you know, if a client doesn't have an exit strategy and they have to renew again, you guys are a way better option at that point.
Yeah, and I'll say right now that a lot of times there's an anticipated strategy to exit our mortgage, and that's fine. That's why we only do 1 year terms. However, with this market right now, we're seeing it's harder and harder to get back out to the alternate side, back to the A side. And so to have that peace of mind to know that you can still renew with us is actually huge. And the other part of that too is I do caution a little bit when you see such great rates out there in an environment like this in the private space. Is to look at what that renewal fee is, because a lot of times it's just a delay of income for that MIC to the end of the term,
and then slap all that.
There could be a 1, 2, I've seen as high as a 3% renewal fee. That does not do the borrower any justice
at all. The market overall, are you thinking like VWR is going to be at a point where they're going to be tightening it a little bit more, or do you think they might loosen up a bit?
Yeah, so that's a great question. To be honest, we have tried our best to tighten up without as great as impact and the things that are easy to understand, such as the condo. We've done quite a bit. I actually listed them all out, and there was quite a few. And we've actually started to relax some of those a little bit too. And what I mean by that is anything that could affect marketability, sometimes we do scale back. As you know, such as some busy highways and things like that.
Yeah, we ran into those in the past.
And so instead of maybe moving down to 65% in a market like this, we've slowly started moving to 70% for some of those. These are our ways of actually getting back into the market in some areas where we've been a little more conservative. So we're already doing that currently.
Yes. I remember those highways and power lines in the back. We would send in those deals, and you're like, oh, there's highways and power lines in the back. We can't do this deal. But you know what? It's good that you guys got a bigger foot. This was maybe 5-6 years ago, right? Yeah. Now you guys got more footprints in Ontario, and you guys got actual people here, which is amazing, right? Nerocean is amazing to work with, and which is amazing. Now, one of the few things that we're also coming across is appraisals. When appraisals comes in low, what do we do?
I mean, that's a big question. So they are coming in low. I guess we could state that. And if we're talking about just your refinance, that's a lot of times perception. If we're talking about purchase in the past,
let's say, do you guys need an appraisal at the time of the renewal? Most of the time, you guys, some lenders ask for appraisals at the renewals, right?
Yeah. So
but you guys don't even need an appraisal.
We don't. Now, I will say, just to protect us for sure, it's always our discretion. Typically, that only happens in some rare situations, right? So, I mean, asking for an appraisal right now on a condo that was done a year ago, we know what the value is going to be. It's going to be lower. Yeah. So, it's fine. We need to make sure that we have our regulators, we have our stress tests. We need to ensure. We do our own work in the background to ensure that we do have enough equity in our properties as well too.
What is one of the craziest deal that you guys got?
The craziest deals that we have.
You're like, I can mention a lot of those, but no.
So we get a lot of unique situations where I believe our partners think there isn't a solution, and something like that is what you mentioned earlier, where we can actually just blanket another property, make it a lot easier for you. The crazier situations we get constant ask for commercial buildings or agriculture land or things outside our area.
You guys are very just residential, right? They forget sometimes.
Yeah, so we are very residential. Now, I think that, I don't want to say crazy, but maybe something to be aware of is one thing that we get often is we don't get the full picture. And we are a private lender. We are regulated still. We know about the licensing and how tight things are getting and how fines are getting. We just need everything disclosed. And so when we go into it, we think, hey, this is their first purchase of a property. And we find out they have a portfolio of rentals of about 50 of them. That's pretty crazy to me.
That's a huge red flag. What are some of the other red flags that might kill a deal?
Other red flags that kill deals is sometimes an appraisal that actually isn't one of our preferred appraisers that is sent in maybe after we've provided a commitment to let people know who we require as an appraisal. And then we start looking through that non-preferred that nobody knows about. And then we start seeing maybe some names matching, things like that, right?
Yeah.
That's a part of the crazy part I'm talking about too, but also that is...
you guys do a lot of Google searches, no?
We do Google searches. We can do AML searches as well too. I mean, we have an identification process we have to go through as well with the credit bureau and the application as well without seeing a borrower. So there is quite a bit of checks that we do ahead of time. So.
When we talk about private, Stephen, who's an ideal private client?
Ideal client typically in this space is usually self-employed, doesn't maybe declare all their income. Their income doesn't look well with the bank, but they have a good net worth. They make their payments on time. And that's honestly, if you take our book, that's what it looks like right now. Now, if you have bad credit, do we care about the credit score? No, we just need an explanation.
So no credit score whatsoever.
No credit score minimum. If there's any derogatory, any notes on there, we need to understand why, right?
Okay.
As far as income, we need to make sure it makes sense. So
suitability.
So if you do explain on an application that you work at McDonald's and you're buying a $1.5 million home, we need to know how you cash flow that, right? And not on paper. We're not verifying that. We need to make sure that story makes sense.
Somebody that has bruised credit can still get a mortgage through you guys.
Correct, yes.
Because you guys are more of an equity-based lending, right?
Yeah, so we are equity-based. I do, right now in this type of market, there is a lot of mortgage arrears out there and in other places. So I will say if there is arrears at other private lenders,
you guys won't.
We are not taking those over. And why do I say that? Well, we tend to always have funds, right? And I know a lot of other private lenders run their business differently, and that's up to them. But we typically have a lot of funds, and that is known in the industry. And so we get all of those trying to be pushed out of other privates into us. And so it does skew our portfolio. So we do have to slow down on those. Yeah. That being said, if we're paying out another private, we will go up to 65%, so not to our regular 75%. But arrears do have a big part in our loan to value right now. So if there's arrears on that mortgage, we will cut back.
You won't even do the deal, or you'll cut back most likely.
So we'll cut back. If it's at an A lender or alternate lender, we'll cut back and still do that. If it's at a private lender, we consider if you go to private and you have bruised credit, that was an opportunity for you to turn things around. Yeah. So we consider ourselves almost a last resort lender in those situations. So we're not willing to take on other people's problems, as rude as that might sound.
No, it definitely does make sense. Yeah. But let me ask you this question as well while we're on this, taking over people with late payments and everything. Now, how long can they miss a payment before you guys start actioning? Like, not just you guys, any private lenders usually.
So other private lenders very different. So I've seen private lenders, they don't even have a collections department. So there's many different.
You guys got a whole team, right?
We do. We call it mortgage recovery as well too. So mortgage recovery, your payments. Our admin team actually, it seems odd, but is our biggest team. So servicing the borrowers is a huge part of our business. Once you do get in the private space, typically to 2 months of payments in arrears,
they don't want to deal with it.
We start talking to the borrower and we honestly, we don't want to get to the foreclosure part. Yeah. We will work with you. I've even seen payment plans on if property taxes isn't up to date. So we can give, hey, here's 6 months. Let's add this payment to yours so that we can
up to date.
Get you up to date so that you can then start maintaining all these payments, right? So there is no harm in us going through those options with borrowers. And actually, some of our longest term borrowers are the ones that we've provided those plans to. Yeah.
Because sometimes in times like this with inflation and the market, the grocery bills going up, people sometimes, they can't make ends meet, right? Yeah. It's tough times for a lot of them. And, when they do miss, it's not like they miss it purposely, but it just happened that you know, they gotta choose between certain things, right?
Yeah.
Which is unfortunate. What is something that differentiates VWR with other lenders out there?
There's many different models to it. We have we've always had the grounding in our company that we are not going to put the borrower in a worse position.
Correct.
Right? So the fees are there due to the borrower, and it does help supplement our income and our investor return as well too, for sure. But our rates and fees, we want to keep near the top of the market. We want to be a leader in the industry, but we also know that it costs money to do business.
Yes.
We cannot be everything for everybody.
Yeah.
There is a cost to do that. So if you wanted a deal to fund in 4 hours, I could do it for you, but I need $1 million, let's say. There's always a cost to doing things like that, right? Yeah. And that was an exaggeration, by the way. So yeah, we can't be everything to everybody. I do also want to point out our sales team as well too. We are small, we are mighty. Yeah. We are not high pressure salespeople. So we're not going to come in and make sure that we just check off a contact. We tell you we need this deal in to get this commission. That's not who we are. We're pretty down to earth people. No, we will tell you no and tell you to go somewhere else. Like we will tell you a place to go even a lot of times. And I think that in this market, you're starting to see some separation in that part too. So it's trying to have real relationships over a sales relationship. There is a little bit of a difference there, I think.
You guys are awesome to work with. And, you know, I have nothing except good things to say about you guys. Like from the time when I opened up the brokerage, you guys been very supportive. And even from the time we've been dealing with clients, even, you know what, there's the odd clients that do miss payments, and you guys are really good to work with you at the back team, which is amazing. And that's the reason we keep coming back. And, you know, your fee model, your fee structures, your rates, it's awesome. And like I said, you guys have an amazing process, especially with like the commitments coming within the 24 hours, which is amazing.
Yeah.
Having said that, thank you, Steve, for joining us today. That's all the questions. We will be adding Steve's contact in there too. Sorry, not Steve's contact, VWR contacts. Great lenders to work with. So if you guys have any deals that fits their bucket, please send it to them. Thank you, Steve.
Thank you very much for having us.
Thank you.